there are other market luminaries like Radhakishan ji. He is the rarest of rare gem. He has been a successful speculator on the long side as well as on the short side, which is a rarity in itself. He has been a fantastic investor where he used to own all the blue chips, and very late you would realize that those were blue chips. And of course, then he built a business that went on to create tremendous wealth. I'm sure you had a fantastic vantage point to see him grow as well. What have you learned from him?
I don't know whether he'll like me talking about him and his investing style and all, but someone has to do it, I guess. So, yeah, he is actually an original investor and an original thinker. Like, he figured out all the concepts of investing which we read about from Warren and Charlie and all these Peter Lynch's of the world, and in a very desi, earthy way. Like, for example, he would say कि इन्वेस्ट करना है तो ये धंधा क्या पैसा फेंक के बनाया जा सकता है. So basically, can you throw money at a business and build it or disrupt a business? So, which he's basically talking about moats, but he figured out moats in his own way. Okay, one thing which I have heard only him say and nobody else is, क्या मैं ये स्टॉक को P देना चाहूंगा? What is PE? PE is actually giving someone more than what he's earning. And the third thing which he always keeps in his mind, never articulates, but will you lend money to this promoter? अगर तू उसको 5 करोड़ रुपया lend नहीं करेगा तो उसका 5 करोड़ का शेयर क्यों खरीद रहा है? So basically that test which he internally came up with was very clear. His investing style is very innovative or very original again. He had two portfolios. He had one portfolio in his mind, he had two portfolios. One was made of businesses which had nothing to do with the government, which had very simple businesses, which were low debt or no debt, which were cash up front, and if possible, negative working capital. So banking, insurance, Nestle's of the world, so consumer brands, and D-Mart or Jubilant. So these were the businesses which were his core portfolio. There were others which he called Barsati Medak. So those were to be sold at the first hint of trouble in the market. He was a very fantastic judge of the market, or is a fantastic judge of the market. So whenever he saw overvaluation, euphoria, blah, 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 that part of the portfolio went out. This part of the portfolio, come what may, he will not sell. So all these things are original to him.
How did he manage to do that without reading a book? Because all investors swear by reading.
So, yeah, he's got a genius level intellect. He may not speak, he may not articulate it much, but in any room, he's the sharpest individual. Okay, then he is the best listener I have met in my life. And he'll judge a person in the snap of a finger. He will know in his mind, say, for example, if he is to invest in automobiles or cement or software or ABC, he will know which person to call to get an update to the minute. There are people in markets who are very, very, very updated on so many things. And he would have them on speed dial. You know, in one phone call, he'll update himself on industry thoroughly. Or if he wanted knowledge about a promoter or a person, he would know whom to call to figure out things about that person.
How do you keep evolving as an investor?
So, since my investing journey began in late 80s, mid 80s to Harshad Mehta bull run was anything works. May 92, when that bull run ended, to I think late 97 was a horrible period in the markets where hardly anything made secular wealth. And that is when you learned, or rather I learned, excuse me. And after that was the TMT bull run, which was 98, 99, 2000. 2000 March, that ended. And then you had the Ketan Parekh bear run, which went on till 9/11, after 9/11. So September 2001 markets bottom. So my investing journey began or was largely consisting of a time period when stocks were available quite cheap. I bought a lot of stocks at 10%, 12% dividend yield. Say, for example, Ramesh Damani, he identified McDowell, which is now United Spirits, at 200 crores market cap. And we sat in CCI and discussed McDowell that for 200 crores, you are getting 50% of India's hard liquor market. Those were the days when it became. So my investing journey began when everything was absolutely cheap. So I became a value investor. Now, as I said, I had to evolve from seeing those PEs to now where we are at, where analysts come to me and at 40, 50 PE say they are cheap. 27, it is traded at 30 PE. So yeah, it is a journey, but it is tough. You have to fight your basic instincts, your gut, to come up with fairer solutions. But still, that instinct remains. I am unable to overpay, and that is my investment.
Do you think there is a disconnect between that intrinsic value and the value that market is giving, and there will be a one big reset at some point of time in the market?
I have no way of answering that. But for a value investor, there will be sectors which are ignored. There will be sectors which are undervalued for whatever reason. Like over the last 5 years, this China Plus One gave us chemicals. Realty was ignored because it was a bad sector. Entire realty sector was 1% of the entire market cap of India. Then you had PSU banks. They were, pariahs, dogs. You don't ever invest in PSU banks. But they gave fabulous returns. So there will be stocks and sectors like that. And there will be sectors where, which are hot. And those you avoid.